Welcome back to your boys' Dividend YouTube channel. You got Lanny and Bert, the Dividend Diplomats. We're rocking the Vanguard hats and the Diplomat coffee mugs. We're ready to go this morning, so get hyped, get excited, everybody. We're talking about my 3 stocks on my watch list in the coming week. So get excited. Let's freaking go.
Hey, yo, Chico, hey, Bert, it's a Reza Bert over here, and he's got 3 dividend growth stocks, guys. 3 stocks on his list. I know 2 for sure you've been buying this year in 2023, Bert. Very excited to see all 3, obviously. And guys, you're here at the channel. This will take 2 seconds. Subscribe to the channel. Give this video a thumbs up. We're trying to reach 20,000 subs by the end of the year. We're just over 17,000, so we have some ways to go. But make some noise, show some love. But let's get into it, Bert. I mean, the
Yeah.
market's been on a tear, obviously, as of
Yeah.
late.
Yeah, it's incredible what's going on with the S&P 500. And what's crazy is we're entering earnings season now, but every week we keep saying there's news that just keeps contrasting each other. Last week was a good week. There was some good news here. Inflation cooled, so the market jumped up accordingly. Some of the short-term treasury yields came down, but we're going to really see the impact of inflation and what companies are expecting for the rest of the year as earnings releases come out and guidances are updated. So that's caused the S&P 500 to jump up a little bit, which means we're still on the lookout for undervalued stocks. We don't care what the S&P 500 is doing. That's why we're putting these watch lists together.
Always be buying, as we keep preaching here on this channel, guys. We're trying to just keep growing this portfolio slowly but surely to get to that financial freedom promised land. Obviously, a lot of earnings are coming out, as Bert was indicating. The banks have been releasing earnings. No, we're not talking about bank stocks today. Don't worry. None of them are on Bert's watch list right now.
Yeah.
Kind of mixed reviews. Obviously, JP Morgan killing it after the First Republic deal. But some banks aren't seeing, profit surge or rise right now. I know it's very stressful in the financial institutions arena, obviously with the fight and war on your deposits. So very interesting right now, causing the market to kind of react very interestingly on Friday, July 14th. Did it end up finishing down, Bert, for the week on the last day?
I can't remember. That's actually a good question. Oh, let me just pull it up.
Yeah, let's just check. Yeah, it was down about 10 basis points, Bert, S&P 500
Yeah.
on Friday. But for the week, it was up 2.5%, crossing over 4,500.
That's what I mean. It seems like everybody is just trying to grip onto any good news that they can and just help bolster a rally. That's at least how I feel about it watching it. But we'll see in the next few weeks to come out. But regardless, I ran some stocks this morning. I ran our screener, which features 3 metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and dividend yield. But I also didn't look for any new stocks because I've been trying to build up my positions lately. I found 3 stocks within my portfolio that I'm looking to buy. When I say buy, I'm not saying drop $1,000, $2,000, $3,000 in each one of these.
10,000, right?
Yeah, it could just be nibbling on them. It could be nibbling $100 here, $200 there, 1 share here, 2 share here, 1 million shares there. Who really knows, depending on these stocks, right? Isn't that right, Lanny?
Yeah, I think it all just depends on the stock price. I guess you could buy 1,000 shares when it's a dollar. You can drop $1,000 right there. But yeah, you're right. But these are, I know a couple stocks you have been buying. Maybe even one stock you did get to 100 shares. No,
Yeah.
it's not Johnson and Johnson nor Tyson Foods. So Bert, let's just get into it here. Let's look at these 3 stocks that you're looking to buy. 3 stocks that you might consider buying right now. Here at the midpoint of July. First one, we're talking about a dividend king here, Bert.
Yeah, Target, ticker symbol
Ooh,
TGT. You're right. This is the one I just got to 100 shares with. And I might just keep adding and keep nibbling there. It's a big staple in our household. And every time we go to a Target, it's jam-packed. So I also kind of am letting my eyes do some of the telling there for what's going on with Target. But it's been a tough 2023. They've had some bad marketing campaigns. We don't need to go into that. But that's helped sentiment. But they're also getting hit by negative consumer sentiment with tightening budgets and lower margins. That just hasn't helped Target at all. And then you had theft on top of it. With that, though, the metrics are looking pretty solid. I bought them in the last month, and this is one where I might just keep picking up 1 share, 2 share, 3 shares. I don't know, but I'm liking them there. So we'll run through the metrics and show you what we're seeing.
Man, yeah, let's dive in. I know I've even bought a couple of shares of Target. They just closed, you know, almost $130 again at $130.92 for TGT, the big bullseye stock here, the stock or the company that keeps you really intertwined here. Now, Bert, analysts expecting still double digits in EPS at $10.14. And I'm pretty sure now this has been coming down gradually. Each update that the analysts have been, reviewing news and
Yes.
releases.
Yeah, that's right. And even with that, the PE ratio is still 12.91. So it's not as if earnings are falling and the PE ratio is like climbing through the roof to being higher than the market. It's still a heavy discount to the S&P 500, which continues to be in that 20x plus range. So discount compared to the S&P.
This is not the first time either that Target's been, gone through a little bit of turbulence, obviously with the Walmart, Amazon wars, with what they had to do there. Obviously recently with the, as you said, the stealing, um, and then the bad publicity with what they did from a marketing standpoint. So, again, they've been through it before.
Yes. Yeah. So let's look at that payout ratio, $4.40 dividend. That gives you a payout ratio of 43%. So again, as earnings continue to drop, earnings continue to slide, Target can withhold and continue paying that dividend. So it's in good shape right now.
Yeah, I agree. I don't think I see that dividend's not going anywhere. And they've been growing it for 51 straight years to get into that growth.
Mhm.
Obviously, the last increase was very small. And, 40, at a 43.39% ratio, they can keep growing that dividend. The average growth rate, though it's not going to be like this going forward, has been 12.5% over the 5 years.
Yeah. So yeah, it's going to be slower. Um, yeah, that's just what you expect. I have nothing more to really say about that. And especially as they continue to work through it. But they're a great long-term dividend payer. That's what you want to see. Good times and bad, they still continue to find ways to increase those dividends. And
Bad times don't last, but bad guys do.
oh,
So,
I thought you were going to say, but dividends do.
yeah, that's good. That's a good phrase.
Yeah. Yeah.
Yield is at 3.36%, almost trading a full percent above their 5 year dividend yield average at 2.39%. Obviously, they're down 14% this year, so that speaks to that.
Yeah. So again, we'll put the chart up here. Low PE ratio, payout ratio is perfect in that range. Long-term history of increasing dividends, 12% 5-year growth rate, but we're not expecting that. And a yield of 3.36%. Look, it's one of my largest positions. That's why I don't mind if there's a week where I'm just looking to buy, just throw any money we can at the market. One share of Target's not a bad place to park it, in my opinion, if you ask me.
Let us know if you guys have been buying Target stock in the comments below. All right, Bert, I love this stock. Pumped to see it on your watch list. I know you now own it. So talk to us about the second stock on your stocks to buy list.
Lionel Basel, ticker symbol LYB. I've been talking about them a lot lately. We built my wife's position over the last few years, and we now own 28 shares, a market value of 2,500. So a pretty solid position. You know what? We want to keep buying and keep building more, because you know what? The metrics for Lionel Basel are looking great. The dividend stock is actually up this year. It's up 8%. Over the last 52.
Wow.
Yeah, yeah. Last 52,
Yeah.
it's up 7.39%. We're not just looking at the dogs here. We're not looking at the dogs. This one's actually up. So we're in good shape. But in reality, massive chemical company. You always see them in the news for acquiring projects, making moves to put some cash to work, increase that cash flow, and keep moving their projects ahead so they can continue generating earnings and continue growing that dividend more importantly.
Who's making some noise with Lionel Basel right now? Let us know. I know it's been a very fun dividend growth stock for dividend investors out there. Obviously, they're a fun special dividend player as well. And Bert's gobbling it up over here. He's bringing out the wallet and he's just saying, "Take my money and take it now." $91 though, Bert. They're trading
Yeah.
at.
Yeah, so their EPS is 920. That gives you a PE ratio of just under 10, so 9.89. Very cheap. Again, like Target, very, very cheap compared to the S&P 500. They pay that $5 annual dividend, that's not including any special dividends. That gives you a payout ratio of 54%. So again, another stock that is in that perfect payout ratio range. In terms of dividend increases without the special dividends that come every few years, 5-year growth rate's 4.87%, and they're almost increased for a decade in a row now. So they're building up that dividend growth streak. And Lanny, what is this yield looking like?
Guys, the yield is swelling up. They're doing big Papa Pump Scott Steiner now style. Remember, holla if you hear me. 5.49% dividend yield, about 30 basis points over the 5-year yield average, which is 5.19%. Again, up 8% plus this year, up over 7% since last July. So positive momentum, but I know recently they've taken a little bit of a slide, I think. If we look at their, let's pull up the LYB chart right now. Over the last 5 days, up 1%, but the last month down about 1%. So really, a lot of that gain was in the beginning part of the year, it looks like. So we'll have to, obviously see what the second half does. But yeah, pretty good value here, Bert.
Yeah, so let's look at number 3, WestRock, ticker symbol WRK. I actually grabbed 5 shares right before the close on the 14th here, so snuck this one in. I know, right? Big spending there. Big spending for WestRock.
WRK. Yeah, let's go.
Yeah, it was just in our video that released yesterday. This is one of my worst performing positions, so I decided to say, screw it. I'll average down a little bit here.
Screw it, add to it, as Bert was saying in the last video.
Yeah, you know what? Because WestRock, they're cleaning up their balance sheet. They did cut their dividend at the onset of the pandemic, but they've also now shown that they're going to increase it again. They've increased it for 2 consecutive years post dividend cut. So that's why I'm not as hesitant to add. Typically, right after a dividend cut, I'm not going to jump in. But now they're on the road back to building up that dividend increase streak. And transparently, I thought, like, you see their boxes everywhere. As we joked in the last video, Lanny sent the picture of the box. It's not as if their cardboard boxes aren't being used, and it's not as if shipping things in cardboard is going anywhere anytime soon. If anything, that market's going to continue growing as people shop in stores less and buy things online more. So it's interesting with WestRock.
Yeah, very interesting. Obviously, I've kind of grabbed shares throughout this year every now and then. Bert, I know you own over 81 shares. Is this a stock that you're interested, by the way, to getting to 100 shares?
Yeah, it's going to be a fun benchmark. Just like, yeah, because their current price of 29.73, I'll just do a 19 shares here, 564. So yeah, that's not bad. That's not it's
X-Pac, make some noise.
Yeah, it's a doable one, but I'm not just doing it for the sake of it. I'm doing it because the numbers also make sense right now for WestRock, especially when you run them through the screener.
Yeah, Bert's doing it all for the covered calls here, guys. No, I'm kidding. But yeah, the trade at 29.
The volume and interest is really high for WestRock. That one, everybody wants those options, right?
Analysts are expecting $2.53. So kind of the second out of the 3 stocks from a PE standpoint, they're at 11.75, well below the S&P 500. Bert, I mean, man, they pay $1.10 in dividends per share per year. So that payout ratio is also in the sweet spot. So you've got a little dividend trifecta, you betcha here, at 43.5% payout ratio.
Yeah, and that's really it. I mean, you want to see if earnings fall, there's plenty of room for the company to continue growing and maintaining that dividend. That's why we love it so much. I didn't include their 5-year average, and I mentioned that they don't have an average because they cut it, and they've increased that dividend twice now since that dividend cut. So they're growing it back. Their yield is 3.7%, a hair above their 5-year average yield of 3.62%, which I also thought was funny because their 5-year average yield includes the yield before their dividend cut. So they were paying a higher dividend, and now their current yield is still above that 5-year average.
It's amazing. It's amazing. Yeah, you got a couple basis points on that. Down 25% since last year, down 16% this year. What's going on, Bert? What's on your mind then? Is this a stock you're going to keep nibbling at below 30?
Yeah. Yeah, that's what I mean. I bought 5 shares to end the week. It doesn't take a lot because it's below $30 per share. So it's a good one here or there. You have some extra money lying around. Just keep building that position and keep building larger positions. And for me, I'm already at a loss, as we talked about yesterday. So keep lowering my cost basis too. That doesn't hurt either.
Doesn't hurt, Bert.
Yeah.
Keep pounding the pavement. But yeah, 3 stocks here. Target, we'll show the metrics. Lionel Basel, WestRock, all with yields above 3%. Lowest being Target at 3.36, LYB at 5.49. LYB with the lowest PE, Target with the highest PE, but all below the S&P 500.
Yeah. So let me know what you think, everybody. Let me know what stocks you're watching if you're not watching these three. And if you haven't already, subscribe to our channel. Give this video a good old-fashioned thumbs up. And remember, if you're not with us, you're against your boys over here. So get out.
That was Bert the Hurt and Lanny from the DD. Over and out.